All right, y'all, back to work. Well, we did not get the bear trap we talked about in last night's video. That's how trading goes sometimes. Still a pretty darn good day today, though, in the morning trade room. Hope you guys made some money out there as well. Now, we have what might be the most important video of the week this week, because tomorrow we have the big NVIDIA earnings. Arguably the biggest news of the week is tomorrow afternoon. We are going to get some volatility around NVIDIA tomorrow afternoon. More importantly, though, we have some beautiful ranges on the charts right now, on the faster tick charts right now. Now, ranges. That tells us that breakouts are probably where the money is made tomorrow. Now, breakouts, they sound very easy, but some breakouts you can trust and you want to trade with. Other breakouts you can't trust and you want to trade against. So tonight, I want to talk about which breakouts I can trust, I can trade with, and which breakouts are more likely to be fake out breakouts and we should trade against. So tonight will be a masterclass on range rotation, breakout pullbacks, fake out breakouts. So buckle up. Take lots of notes. The charts look fantastic tonight. Let's dive right in and go find some winning trades on Wednesday morning. S&P and SPY is ready to go tonight. As you can see, Nasdaq QQQs are all ready. I have 4 very important clues on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. One of those 4 clues is right here on these hourly charts. It's easy to see right now. The S&P and SPY is bearish overall on the 60. The Nasdaq QQQs are bearish here on the 60. But are you seeing these big ranges right now? Look at that monster range on the S&P SPY. We are right at the low. The last times we were in this area, we bounced all the way back up again. Still pretty bearish, but boy, I'll tell you right now, difficult to want to be a seller in this area on the S&P SPY right now. Look at the beautiful Nasdaq. I love this big wide channel, but most importantly, look back at that deep seek freak out we saw a few weeks ago. We now have a perfect symmetrical pullback off that deep seek drop we saw a few Sundays ago. So again, we're definitely bearish overall right now, no doubt about that. But boy, is it tough to justify being a seller at all of this area of support. So bearish overall, but right for a rotation back into the range above on the S&P, right for that rotation back higher here. That's one very big clue. Now, I have another clue. A second clue is over on the schedule for tomorrow. And no, it is not the new home sales number coming out at 10 o'clock Eastern time, although I will keep my eyes on that tomorrow morning. Everybody is waiting for the NVIDIA earnings tomorrow after the close. Now, why is that important? Well, because we'll definitely get some volatility leading into that number tomorrow afternoon. My goal tomorrow will be to get in as early as I can, because when we get closer to that announcement coming out tomorrow afternoon, markets do tend to do things they wouldn't normally do. So my mindset tomorrow is get in as early as I can. I can leave a runner in the afternoon, but I'll be careful after lunch tomorrow afternoon. That's 2 clues. Third clue is now over on the tick charts. We mentioned earlier this just gorgeous range here right now on the hourly. Speaking of a gorgeous range, drill down to some tick charts. We have the 3rd and 4th clue right now on these tick charts. And by the way, all the time frames you'll need on the upper left-hand corner there. That is a 7,000 tick chart. And that yellow line right there is the only indicator I use to find winning trades each week. That's a 21 EMA. There's 2 more important clues here that are really kind of tipping us off to where the best entries will be for tomorrow, because it's good to know the big picture stuff on the hourly charts, but timing entries is much easier on some tick charts. One clue is this bullish range. Now, why is a bull range an important clue? Because ranges, they love to rotate back and forth, back and forth. So if you understand how rotation works, and we know we're overall bearish, I'll bet there'll be a lot of bears looking to sell up here. I'll bet there'd be some bulls looking to buy down here. Now, that support area, that brings me now to my next big clue, and that is this previous trading range. Now, why would an old range be a big clue? because anytime we see a range breakout, a breakout pullback is one of the most consistent things I know about trading. So put all these clues together. Bearish on the hourly chart, but at big time support. We've got a bull range going higher that will want to rotate back and forth like this. And of course, that previous range that's begging for a breakout pullback. So I love the idea of buying some bear traps below that trading range. I have 3 different ways to time the perfect bear trap below that low. We're going to cover that a bit later on in this video. Right now, what's happening though is we're trying to rotate off the low of this trading range. Remember, we might be bullish in the short term right now, but we're very bearish here in the bigger picture on the hourly. So as we go higher here, we can be very careful chasing after and buying breakouts because again, it's going to want to rotate back and forth using these things called pendulum swings. So as we go higher here, I would love to look for what is basically a bull trap. As we start pulling back to that 21 EMA, I want to see if I can get buyers trying once, buyers trying twice. I would love to get a lower low in price, move right above that high, and a nice strong red candle closing back below that 21 EMA. This is a bull trap. Now, where does the market want to go? It wants to rotate roughly the amount above, roughly the amount back down below. That's where the market wants to go now. The easiest way to make more money in trading, add to your winners. And one easy way to add to your winners, we call these add-ons in our trade room, is a lower low in price, above a prior swing, right above that high, another strong red candle, closing back below that moving average. That would be my add-on. So again, one of my favorite trades here for tomorrow is I'm looking for that bull trap up there. Sell into those stops, trap those buyers in and sell into those stops. Then as it rotates lower, add to that winner. The easiest way to make more money is to add to your winner. And once you know how ranges rotate back and forth, you'll have a lot more confidence to add to that winning trade. Now, one variation I want to talk about here right now. We sometimes will go up and there's so many bears up there, we don't get a chance to trap the bulls in and squeeze their stops back down again. Every once in a while, we'll get a pop up and it will get whacked right back down again. If it V-tops off the high, look for this follow-up pattern. I'm going to mark a trend line off that low. I'm going to bring that trend line up around those highs. That finds a new channel. Whatever you do, do not chase after this going lower. The trick is I want to sell as high as I possibly can. And to do that, I want that first, we call these first test traps in our trade room. Notice this is the first touch, the first test of the high of that channel, and it's right above a prior swing. If you're in my free video classes right now, we call those bull traps. A nice strong red signal candle coming off that high and bam, right? That is again, not the ideal. I would rather go up and trap the buyers in back in again. But if all we get is a V top up here, the hardest part about these is don't chase after it. Your patience is rewarded by selling that first test trap off of that high. Now, we know we're at some big time support on the higher time frame. What would it take for a breakout that I know I can trust? Right now, we're pretty bearish, so I got to make sure I'm ready for the bull traps up here to sell back down again. But what would it take? How would I know when it's time to buy a breakout going higher? There are 2 scenarios I look for as we go higher. The first one is simply a pop and grind. If we break out and begin to separate and grind away from that moving average, that is a dead giveaway now. It'll pop up. All the pullbacks will separate away from that moving average. Remember, separation equals strength. Now, draw a trend line off the highs, bring that trend line down around that low. If we're lucky tomorrow, we'll line up these prior highs along with one of these prior swings. I want to buy that pullback, this to be a breakout pullback. And remember, I'm not going to blindly buy this stuff. What I'll do is I'll wait for a price to pull back to that 21 EMA, look for a bear trap, let bears try once, let them try twice, squeeze their stops. And remember, want to make more money? Add to your winners. Higher high in price, there's your add-on. Remember, traps and add-ons. Traps and add-ons. In this case, it's a bear trap below the moving average, off the low of that channel, ideally off some of these highs, that prior range high there. It's a bear trap and an add-on as we go higher. Now, I have one more. I mentioned there are two scenarios I'm going to look for that will tell us it's time to trade a breakout going higher. This is one of them. Before I cover the second one though, let's slow down for a second because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy, a brand new language I'm talking right now. Don't you worry though. I teach this entire system. In fact, I have a ton of examples of bear traps, add-ons, bull traps, range rotations. Guys, I want to make sure you learn how to time better entries and get more consistency in your trading results. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current indicators, your current trading strategy, again, hit that link that popped up there. Watch that free trading course. Everyone loves the trade examples I share in that short video series. The best part is it is 100% free for you. And also too, folks, keep in mind, I'm going to put all the important links you'll need to learn the system, time better entries, get more consistency in your trading. I'll put all the important links in the description of the YouTube video. Start first with the free video class. Most folks start making money on their own. Just that free video course linked up there for you in the description of the YouTube video. So start there first. And don't forget, we trade together every morning in our trade room. I'll put trade room membership links down there for you. And if you're on Twitter or X, I post a lot of charts and videos and updates throughout the day. If you're on Twitter or X, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, be linked up there for you in the description of the YouTube video. So where did we leave off here right now? Yes. I talked about there are some times when breakouts can be trusted. One of them is that breakout and that grind, right? Anytime we see separation off that moving average, it tells us there's a lot of bullish momentum. There's one more scenario though. If we were to break out and go into another trading range. These are very common, especially ahead of major news events with NVIDIA tomorrow afternoon. If we break out and go sideways into another range here, what does that tell us? It tells us that this new range is the magnet. The previous range is now ripe for a breakout pullback. This is one of my favorite chart kind of setups or chart patterns. It's a stacked range environment. One range and 2 range. The most recent range is the magnet. The previous range is now ripe for a breakout pullback. So in these situations, what we do is we wait for a breakout going lower. We look for that moving average pullback. Remember, we don't pick the bottom on this. I'm not going to blindly buy down there. What I'll do is I'm going to wait for price to pull back, get one of those bear trap entries we teach so much in that free video course, trap those bears in. Now remember, where does the market want to go now? It wants to rotate. Where? The amount below, the amount above, right? Okay, so that's where the market now wants to go. As we're rotating, going higher, as always, add to your winners. To do that, you want to get in right below that low. Again, it's a trap. It's an add-on. It's a bear trap, right? It's a bullish add-on as it rotates back and forth. We then complete that pendulum swing, and that's where the 1-2 bull trap now comes in handy, and we short that thing right back down again because, again, it'll want to rotate back and forth. So 2 ways, 2 scenarios we know if we do break out, we know we can trust that breakout. Now, one of my favorite trades for tomorrow, as I mentioned earlier, was with this range right here and that range right there. Boy, I love the idea of buying a breakout pullback right below that trading range. Let's go grab the Nasdaq, though. We'll cover that now on the NQ. NQ is getting a bit lonely over here, as you can see here right now. And what a gorgeous chart here. It's a bit messy, obviously. What a gorgeous chart, though, here on the hourly on the Nasdaq. Isn't it amazing too, right? How the size of that, I call this the deep seek freak out we saw a few weeks ago. Incredible how it's literally to the tick. It's almost if the markets knew exactly where they wanted to finish off that move here today. Now, before we dive into the tick charts though, and talk about some more entry techniques I'm looking for tomorrow, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing to the channel, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people. I appreciate you guys spending a few minutes here every evening on these videos. So thank you so much for the likes, the shares, subscribes, all the ongoing support. Now, I promise I'm done begging for likes here. Let's dive in and get our hands dirty here on the Nasdaq tick charts. I like to use the hourly charts. Those are good, but they're not going to help us time the best entries. Look at this beautiful chart right now on the tick charts here. And again, you'll see 4,000 tick chart there, upper left-hand corner. There is your new range. There is your previous range. Begging for a breakout pullback off that prior trading range. Again, we call these stacked ranges in our trade room. Now, again, I mentioned earlier, right? If we go higher here, remember this range is going to want to rotate, right? As we go higher, it's bull traps off that high. It's add-ons as we go, right? It's traps and add-ons. Let me talk about a lot last night on the video, right? So bull traps off the high, it's add-ons as we go lower. Remember, make sure you know where the pendulum swing is, amount above, the amount below. That will give us now the exit on our shorts, and most importantly, it'll give us the entry now, right, or the location for the entry to go back up again. And again, right, do not be surprised here if we pop up, get whacked right back down again. Remember those V-tops? V-tops are tough until you learn this setup. Once you learn how to trade V-tops, you'll be a lot more patient to wait for that first test off the high like that. That's a really easy trick we see quite often in our morning trade room. And again, if it pops up and grinds, remember the separation. Anytime we see those pullbacks, right? See over here, right? No separation yet, right? No separation yet. See that? The pullbacks are coming in below the moving average. If we break higher though, and we start seeing these pullbacks are separating away from that moving average, bingo, that tells you now a lot of strength for the buyers here now. And again, I know we're bearish overall, but we're way down to those big lows there on the hourly time frame. The key on this one is don't chase after it. Mark that high, mark that low. The goal would be, what a great trade that would be, to line up those prior highs around that prior swing. Oh my goodness, right? That is almost a guaranteed winning trade right there. And again, this will be a bear trap, right? It'll be a pullback, trap the bears in as we go higher high in price, below that low. A lot of examples of these in our free video classes. One thing too to keep in mind too is whenever we see a pop and grind like that, the pop out, the breakout leg is the measuring leg. That will tell us where that final target is up overhead. We talk about that a lot in the free video course. And again, one of the easiest ways to know proof you can trust the breakout is a pop up into a trading range. Because now that prior range becomes a breakout pullback, bear trap in, and whoop, right back up again, trade that rotation back and forth. That is a similar strategy now to what we're looking to do here, going lower here, right? Now, as we go lower, now you probably know how this will work, right? New range magnet, prior range, breakout pullback. We run lower now. Remember, I know we're pretty bearish overall, but it's very difficult to justify being a seller way down right now on the hourly chart and underneath this current range. Bad spot to be a seller, great spot to be a bear trap buyer, right? Trap the bears in once, twice. And again, I know this sounds like a broken record, but once you learn what works, you keep working it over and over again. These work so well in our trade room. I love these setups here. Those bear traps, and of course remember, as it rotates, right? The key to those add-ons is that separation off that moving average and then get that little pullback below that prior swing. That is such a favorite trade of ours in our trade room there. So bear trap, add-on. And again, mark the amount below, mark the amount above. That tells us now where our target is. It also tells us now, do we see buyers try twice and struggle? Bull trap right off the high up there. That could easily be a nice little 1-2 punch tomorrow in our trade room. Now, one thing I want to remind you here is we are still very bearish overall, so there may be a bit of a stronger shot going lower here. I would definitely keep in mind too, if it goes lower like this, it may just whoop and run right back up again. Again, we're pretty bearish overall, but that range is a magnet there overhead. If it V bottoms off that low, don't forget, don't chase after it. Find that new channel, right? And grab that first test is the best test off the low, like I mentioned earlier here on the S&P chart. My favorite entries on these are right below. They're right below that prior swing. This could be any of the entry patterns you guys are learning inside the free video course. One thing I do want to talk about though is we may see this thing roll and keep going, right? If we see something similar, like today, for example, right? That separation right there, right? If we see that separation over here again, right? If we end up rolling lower here, but now we're not getting the 1-2 bear trap back up again. No, we're now getting that shallow pullback and separation, right? Shallow pullback, separation, shallow pullback and separation, right? If we're getting that separation off that moving average right now, okay, that tells you now this trend is still very strong for the bears. Now in this situation, remember, this range now becomes ripe for a breakout pullback. When I think about a breakout pullback in this situation, I think about a two-legged pullback. What's that mean? It means basically what it sounds like, right? It's one leg, it's two leg. Think about a measured move, right? A, B, C, D. Ideally, get around some of these prior lows there. And now again, I'm not going to pick a bottom on this because it might V bottom and keep going here. Look for those buyers trying once, buyers trying twice. Because we're so low on the hourly chart, I will keep looking for entries above those prior highs. Again, bull trap going lower, and that add-on with that lower low above that high to retest that low. So again, no crystal ball for tomorrow. We'll see how this thing plays out for tomorrow. If they run lower, it's that bear trap back up again. But how do you know when to trust a breakout? Yeah, if we run lower and these pullbacks are separated off that moving average, that now tells you that this trading range now is begging for a breakout pullback. Break down, two-legged pullback, bull trap, one try, two try, trap those bulls in. And again, one bit more money, add to your winners. It's always that trap entry initial and add on. The target, of course, now is back down to retest that low. Right, guys? That's the game plan for tomorrow. Now we know which breakouts to trust, which ones to trade with, which ones to trade against here. Now, speaking of tomorrow, the place to be is in my trade room, 8 o'clock Eastern time. Guys, the easiest way to make consistent money in these markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn the system, time better entries, get more consistency in your trading results. Start first with the free video classes. Enjoy all the trade examples I include in the video course. Then come join us in my trade room, 8 o'clock Eastern time, and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.